Hello everyone, this is the pre-market report video for today March 20th in the Indian stock market in terms of Nifty and Bank Nifty. Last week was really very volatile and all three Indian major index Sensex, Nifty and Bank Nifty lost nearly 2%. However, last Friday our Indian market closed positive for the second consecutive day except auto and FMCG, all other sectoral indices ended in green. All because of last Thursday positive US market made our market to open gap up of over 100 points, but in the afternoon profit booking almost pushed it into the negative region, but still Nifty managed to close significantly positive. To some extent, positive European market opening supported our market as well. Last Friday, the advance decline ratio was around 3:2, which means for every 3 stocks advance in Indian market, 2 stocks were declined. Despite that, FII was still a net seller. The net sold shares worth approximately 1,765 crore rupees, but DII supported the market and net bought shares worth approximately 1,820 crore rupees. Then, after the Indian market hours, there was a liquidity worries in Credit Suisse. Here, note, not in US, but in Europe, now people started to withdraw huge money from Credit Suisse Bank. This created the huge panic in Europe and started to undermine the Swiss finance regulation, and thus all the European market major index closed significantly negative. Again, then this created the panic in US market as well, and additionally there were two incidents that poured oil into the fire. First, despite all the support from Fed, Silicon Valley Bank's promoter SVB Financial Group announced that they are seeking the Chapter 11 bankruptcy protection, which means clearly the promoters are not having the confidence. Then the second incident is regarding the First Republic Bank, as they announced that they are suspending their regular dividend payment, and they cited the reason that now they need to pay higher interest rate for their $30 billion rescue package. All these again sparked the fears of contagion throughout the global banking system and made the US market to close significantly negative as well. Dow Jones Industrial Average fell 1.19%, S&P 500 lost 1.10% and Nasdaq dropped 0.74%. In case of VIX, it's like a zigzag. Friday, it increased by over 10% and moved above 25.51. I mean, all 11 major sectors in the S&P 500 index ended the session in negative. Because of this new recession fear, crude oil price again crashed on Friday for the fourth time in the last 5 days. I mean, on weekly basis, it was down 13% and it was the worst weekly decline since the back-to-back crash of nearly 20% in the first 2 weeks of April 2020. At the time of this video, WTI crude oil was trading near $66.5 per barrel. And in last Saturday, Brent crude oil was closed near $72.5 per barrel. Then regarding Indian areas, it's not much different than that of US market. I mean, ICICI Bank dropped marginally of 0.25% and Wipro were down by under 1%. Whereas HDFC Bank closed over 1% down and Infosys dropped 1.75% despite positive close in Indian market. So I guess it's more of a stock weakness rather than the sector one. Then about SGX Nifty, on Saturday at 3 AM Indian Standard Time, it closed at 17,045. So it's kind of indicating 70 to 80 points gap down opening. So is it all bad? No, it's just Saturday closing. Now remember, as I said earlier, on Friday, the global negativity was started by the liquidity issue in Credit Suisse Bank. Yesterday evening, on late night Sunday, UBS Bank, which is the largest bank in the Switzerland and also they are the largest private bank in the world, agreed to buy the Credit Suisse Bank for near $3.2 billion. This is the first global positive. Then the second one, Switzerland Government Central Bank agreed to give $108 billion worth of liquidity assistance to both UBS and Credit Suisse to tackle this issue. Then the third positive is that European Central Bank announced that if any other Eurozone bank required liquidity support means, then they are ready to support them. So all these three positive news was not at all yet factored in the SGX Nifty or not in Indian areas. Again, this now made the US future market to trade 0.5% positive. Thus, it's kind of indicating a flat Indian market opening. Let's see. Now, coming to Indian stock specific. On Friday, after the Indian market close, JP Morgan released the report stating that these three Indian IT companies such as TCS, Infosys and Mindtree got the highest exposure to the US regional banks. I mean, they said that their revenue from 2 to 3% is coming from that particular US sector. So, all these three companies have to allocate some provisions in the upcoming quarter to compensate the loss. This is not good for those stocks, and that's the reason on Friday, Infosys area dropped so much. Then the second one was a bit positive. I mean, I hope you guys heard this American investment management fund called Vanguard. They are the second largest in the world after BlackRock with the assets under management of near 8 trillion US dollars. Now, on last Friday, that Vanguard did the shopping spree in Indian stock market. They invested significantly on some selected stocks such as Delivery, Equitas Small Bank, JP Power and Reliance Infra. So, this information is a huge positive for those respective stocks. As a summary, at present, global momentum looks okay, but still our IT stocks shows vulnerable. Moving on, regarding the items to look out, today before our market opening, there are scheduled due for Chinese interest rate decision and Bank of Japan's opinion. Then, during our market hours at 12:30 p.m., Germany's producer price index data is due to release. In simple English, it's a wholesale inflation. Now, coming to technical, Nifty forms a 7th bearish candle, but it forms a long-legged doji candlestick pattern for the second consecutive day and making a higher high and higher low formation. Consecutive doji pattern means the first one is called recovery candle, then the second one is the indication of bullish reversal and indicating that the market may be looking for a rebound. However, in case of moving average and technical summary, it's still a strong sell signal. The status quo will change only if Nifty moves above 17,300. Then coming to Bank Nifty, it forms a hammer candle and combining the last 3 days, it's a 3 inside up candle formation. First, hammer candle is always positive and bullish indication. I mean, what this candle was telling that there was a strong selling pressure initially, but by the time of close, buyers were regained the control. This kind of signaling that the price was bottomed out and possible upward movement on the following day. Then regarding the 3 inside up candle formation means that over the past 3 days, we have seen a drop followed by a rebound and then an increase, which was a completion of bullish reversal. Thus, this suggests that there is a good chance that we will see an uptrend in the near future. However, again it's similar to Nifty. In case of moving average and technical data summary, it's still a strong sell signal. The status quo will change only if Bank Nifty moves above 40,400. From option change in open interest, below 17,100 everywhere significant put options were added on Friday and above 17,100 everywhere comparatively more significant call options were added. Today is more of the judgment day. Anyway, since the maximum nearby put option without new call option is at 17,000 mark, so 17,000 is the immediate support. Breaking that, then the next support is at 16,800. Then from options open interest data, 17,500 got the maximum call option. However, 17,200 and 17,300 also got the significant call option. So 17,200 and 17,300 is the immediate resistance to break. Coming to Bank Nifty, it's similar to Nifty but a little bit more of a bullish in nature since the put call ratio is around 0.8. Anyway, based on change in open interest, more number of put options added at and below 39,500. And the next followed maximum new put option added was at 39,000. So 39,000 is the support to look out for. And based on open interest data, the maximum call option is present at 40,000 mark. Thus, 40,000 mark is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the videos. It will help me beat the YouTube algorithm. It will also motivate me to do more. Please don't make any investment decision based on this as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.